In the last class, we studied regarding partnership deed and the important contents which are involved in partnership deed, right? Today we are going to study the provisions which are related to partnership firm, which and all the provision that we need to follow at the time of recording or at the time of entering the transactions related to partnership firm. So the first point is profit sharing ratio. So what is this profit sharing ratio? The ratio in which profit will be shared among the partners of an organization, right? So when there are two or more than two people in a particular organization means they need to know the shares, they need to know the percentage of shares that they are going to get. So this particular profit sharing ratio should be very important and it should be mentioned in partnership deed. Suppose nothing is mentioned in partnership deed means they need to share profit in equal ratio. That means if there are three members means in an equal ratio they need to share the profit. If remember, if nothing is mentioned in partnership deed, if there is something is mentioned in partnership deed means in that ratio only profit need to be shared among the members or among the partners. Next one is interest on capital. So no partner in an organization is entitled to get the interest on capital, because capital is what? The amount which they have contributed in an organization, and they are not entitled to get any interest or any return on that particular capital. If suppose we are going to deposit money into bank means we are going to get interest on that particular deposit, right? But in case of money which is deposited in an organization or which is contributed to the organization, then that money will not be entitled to get any interest. If they have made any decision related to this means there is a they have decided that they are going to get the interest on the capital means as per the mutual consent, then they can get the interest on capital, otherwise there will not be any interest on the capital. Then there is no interest on capital which is payable if the partnership deed is silent. If the partnership deed mentions nothing means they are not going to get any interest on the capital. If suppose they have decided with the mutual consent that they need to get the interest on capital means if there is a profit in an organization, that means for this particular period, for the current period they have received the profit, there is a surplus, then they can get. If there is a loss means they are not going to get interest on capital. Then interest on drawings, they are not entitled to get interest on drawings if the partnership deed is silent. That means in partnership deed nothing is mentioned means they are not entitled to have interest on their drawings. Drawings means what? A withdrawal which is made by the partners for their personal use. For example, if they withdraw the money from the business and that is for their need, then they are not going to get any of the interest on that particular drawings. Then interest on advances means what? See, at the time of entering into a partnership firm means the partners of the organization need to contribute capital, right? But they have some limit for the contribution. If the limit exceeds, they are not allowed to contribute capital. But if there is a necessity of that particular fund or capital means they can give money, which will be called as advances. So on this particular money, the partner who is going to contribute that money, he is entitled to get 6% interest per annum. Understood? That means for each and every contribution which is made by the partner, there is a limit. So above that particular limit, they are not going to contribute the money. So there is a limit. Only to the extent of that limit they need to contribute. If there is a need of that particular money in a business means to run a particular organization means they can give money which will be called as advances, on which they are going to get what? 6% interest per annum. And then remuneration for firm's work. Remuneration means what? A payment of salary, a payment of money for the work which is done by the partner. So in an organization, whatever the work that the partner does will not be entitled to get any salary. Understood? So for a particular organization, that particular organization belongs to that particular partner, right? If they are the employees means they are entitled to get salary. But those partners who are working in an organization means they are not entitled to get any salary or remuneration, and there should be nothing there in partnership deed, nothing should be mentioned. That means it should be silent related to remuneration. Then other provisions which are prescribed by Partnership Act, which says that, first point, profit from organization property. That means if the particular partner is going to make profit out of using organization property. For example, in an organization there is a land which they have bought only for the purpose of making business, but one particular partner from that particular organization is going to make a benefit out of that particular property, means he need to share that profit with other members also. Understood? Then carrying out business of the same nature. That means if particular partner, for example, in a partnership firm there are three partners, partner A, partner B and partner C. In this particular business, partner A starts another separate business. It can be of sole trading, and he does the business of same nature. If these particular members who are having three partners, this particular organization performs the operation of manufacturing garments, means if the sole trader, that means the partner A, is performing a business activity that is related to garment or clothes shop, means they cannot compete with one another. If he is competing and he is getting profit, means that particular share of profit need to be paid to this particular business. Understood? So this is related to the provisions in partnership firm, and this one is related to special aspects in partnership firm. So how the accounting treatments should be made in partnership account. So all the accounting treatments are similar to sole trading concern, but there are some new aspects. What is that? Here we need to maintain each and every partner's capital account. For example, in this organization, for example, ABC Limited Company is established in this particular partnership firm. There are three partners, namely A, B and C. If there are three partners, even these three partners' capital account need to be maintained. And second point, distribution of profit or loss among the partners. So here what they need to do, whatever the profit, whatever the loss that they are going to get from their business, that need to be equally shared among the partners. So they'll decide in partnership deed related to their profit sharing ratio. In that particular ratio only they are going to share the profit. Then adjustment of misappropriation of profit in the past. So they need to make an adjustment related to any misappropriation of profit which were made during the previous period. So sometimes there will be misappropriation, the profits will not be equally distributed. So that need to be adjusted, proper adjustment need to be made. Then reconstruction means what? It is done during the time of death or during the time of retirement of the partner. So what is this reconstruction? Entire change made in a partnership firm, because when the new partner admits into the organization or when the old partner retires, so his share need to be given to him, and all the reconstruction work has to be done in an organization. Then dissolution of partnership firm is also during the period of retirement or death of the partner. So related to reconstruction and dissolution, there is a separate chapter and we are going to study in our upcoming classes. So next is related to what? So maintenance of capital account of partners. So we understood, right? We understood that in this particular problem we have to maintain the capital accounts of partners. So if there are three partners in an organization, means we need to maintain capital account of all these partners. So in which manner we are going to prepare, or in which manner we are going to maintain the capital accounts of each and every partner, we are going to study in detail in this class. So in maintaining of capital means, so whatever the activity which is performed by the partner in an organization will be recorded in the books of account through preparing capital account. So in capital account what we are going to record? What and all the activity that the partner has performed in an organization. Related to that we are going to record in his capital account. So there are two methods that they follow at the time of recording the or maintaining capital account of the partner. First one is fixed capital method and second one is fluctuating capital method. So we are going to study in detail related to fixed capital and fluctuating capital method. This is the important question. Please listen carefully. So first one is fixed capital method. What is this fixed capital method? As the name itself says, fixed capital method means where the capital of partner remains fixed. It will not change. So understand? First one, here capital remains fixed unless addition or capital unless addition of capital or withdrawal. That means in this particular account the capital of the partner remains fixed only if it does not remain fixed when there is a new addition of capital, if the partner have given the contribution of capital or during the time of withdrawal of fund. So in these two cases it will not remain fixed. In all other cases the capital remains fixed. Understood? In fixed capital method, capital of the partner remains fixed. Then here two accounts are maintained. So in fixed capital method, we are going to maintain two accounts. One is current account and the one is capital account. So in capital account, we are going to record only the contributions which were made by the partner. That means at the time of entering into partnership firm, this partner need to contribute some money or some capital. So related to that, only related to this contribution, we are going to make entry in the capital account. So all other adjustment related to interest on capital, interest on drawings, salary paid, all these things will be recorded under current account. So why this particular account will not fluctuate? Because the adjustment will not be recorded under capital account. So because of this particular reason, the capital account remains fixed. All the other adjustments will be recorded under current account. And this particular capital account always shows credit balance, because of which this particular account will be shown on the liability side. Whereas this current account, where all the adjustment we are going to record like interest on capital, interest on drawing, salary, and this particular account may show debit balance or credit balance. If it shows credit balance means this particular account will be recorded under liability side. If it shows debit balance means it will be recorded under asset side. So this is fixed capital method where capital of the partner will remain fixed because all other adjustments will be recorded under current account. Understood? So now we are going to study related to the pro forma of capital and current account under fixed capital method. So in this manner we are going to maintain the capital account under fixed capital method. See, first one, partner's capital account. So in the credit side we need to write what? The amount. First, if there is any opening or closing opening balance, we need to transfer that. So that will be called as by balance brought down. So the opening balance should be recorded here if it is a credit balance. Then next on the credit side, see the contribution of capital given by the partner, that is recorded. Debit side, see if the capital or cash which is withdrawn, then balancing figure or closing balance will be written. In current account, all the adjustments are done. See, if the credit balance is there, it will be written on credit side. If debit balance is there, that will be written on debit side. Then other adjustments, see interest on capital, that is written. Partner salary, that is given. If there is a appropriation made related to profit, that is written. So adjustment or adjustment related items will be recorded under current account. So this is the pro forma of capital and current account under fixed capital method. Now we need to study related to fluctuating capital method. As the name itself says, here the capital of the partner is fluctuating. So simple. The reason is simple. Why it is fluctuating? Because we are going to maintain only one account, that is capital account, where all the adjustment will be recorded. So when we are going to write all the adjustment, right, like interest on capital, interest on drawing, at that particular time it is obvious that the capital account will be fluctuating. Understood? So only one account is maintained. And main important thing we need to note down is that if in the problem nothing is given in which method we need to maintain this particular partner's capital account, if that particular information is not given in the problem, means capital account should be maintained only in this method. If they are going to mention specifically, then only you can choose fixed as well as fluctuating. If nothing is mentioned, only this method you need to follow. Understood? So see the pro forma. So this one is the partner's capital account. There are two partners, X and Y. So if the credit balance is there, that will be written on credit side. If the debit balance is there, this is the opening balance. Okay. So brought down balance. If debit balance is there, that should be written on debit side. And then all the adjustments were written. See, additional capital if introduced, then interest on capital, interest on drawings, all adjustments are recorded. So this is the pro forma. Then now we need to study the distinction between fixed capital method as well as fluctuating capital method. So the base on which the distinction is made. First one, number of account. We have already studied, right? In fixed capital method, number of accounts are two, right? One is current and the one is capital. Whereas in fluctuating, only one account is maintained, that is capital. Then change in capital. The amount of capital normally remains unchanged, right? In fixed capital method, as the name says, the fund or capital remains fixed, which is not going to get changed. Then except when additional capital is introduced or capital is withdrawn. So when it will not be fixed, if additional capital is introduced or capital is withdrawn. Only in these two cases capital will not remain fixed. In all other cases, the fixed capital account will be remaining fixed. Okay. Then in fluctuating capital method, yes, all the adjustment will be recorded in this particular capital account. Hence, this amount of capital changes, fluctuates. Then closing balance. The third difference is closing balance. The capital account always shows credit balance. As I have already told, it shows what? Credit balance. So it should be recorded where? On the liability side, whereas current may show debit or credit balance, right? Then capital account generally shows credit balance. So under fluctuating capital account, the capital account shows what? Credit balance only. It may also show debit balance. Sometimes it may show debit balance. But what? Fixed capital what? Only credit balance. But this fluctuating, it can show debit or credit. Adjustment. All adjustments relating to interest on capital, interest on drawings, salary are recorded where? Under current account. Whereas fluctuating, all the adjustment will be recorded under capital account. So these are all the differences between fixed capital account as well as fluctuating capital account. So related to the practical part, we are going to deal in next class.